So we have discussed about the candlestick, but our understanding of the candlestick cannot be complete until we summarize the properties of the candlestick. So let me quickly summarize the properties of a candlestick. And the first among them is the color. So the moment you see a green candlestick, it should automatically come to your mind that it is a bullish candlestick where the closing price of the asset is higher than the opening price. Alright. And if it is a red candlestick, again it should automatically come to your mind that it is a bearish candlestick and the closing price is lower than the opening price. It will not be written there on the candlestick, but just by looking at the color of it, it should be known to you. The second thing is the body size. See, the body size indicates the degree of dominance or the commitment by the bulls or the bears. A larger body size would mean that the dominance or the commitment is higher, whether it is a green candlestick or a red one. Now, for example, have a look at the smaller candles. Here, in this case, the bulls have been dominant. Here, the bears have been dominant. But to what extent? Just to a small extent. Whereas in these two candlesticks, their commitment or their dominance have been quite larger. If you compare it with the game of tug of war, then just imagine that the rope is moving in one direction, whichever team is more dominant. But to what extent? Whether the rope is moving by an inch, by a feet, or by a meter. So that is known by the size of this body or the main body. Alright. Then there is something called as the wick location and the wick size. Now we all know this portion, the thin portion which you see above and below the main body of the candle, that is called as the wick or the shadow of the candle, and they convey a lot of meaning. See, if the shadow is above the real body, that is indicating rejection of the price at the higher level, and the wick or the shadow below the candle is indicating the rejection of the price at the lower level. And larger the wick, larger the rejection, smaller the wick, smaller the rejection. Now what do we understand by this? Look at figure 1 or figure A. Alright, here you can see that in both the cases, this green candle as well as the red candle, the bulls have managed to take the price higher till this point, the point T or the top. They could manage to take the price higher, but at the higher level, at this top, the price was rejected by the bears, and the bears managed to pull it down again in case of the green candle till this point, and in case of the red candle further down till this point, the closing point. Alright, that means the price was rejected at the higher level, and this rejection has been quite a bit, quite higher. On the other hand, if you see in figure B, the bears have managed to pull down the price till this bottom. B indicates bottom. So the bears have managed to pull down the price right up to this point in case of this green candle as well as the red candle. But at the lower end, at the bottom, the bulls rejected that price and they managed to bring the price back again on the upper side. In the case of green candle, the bulls were managed to bring the price right up to this point where it closed. C indicates closed. And in case of this red candle, again the bulls were able to manage to pull back the price till this level, the closing here. So the rejection of the price was there at the bottom, and the rejection was quite a bit. But if you see this portion and this portion, here also there has been rejection. Here there has been rejection at the bottom. Here there has been rejection at the top. But this rejection is comparatively much lesser than the rejection indicated by these longer wicks. Alright. Then we see sometimes candles which do not have a wick or a shadow at all. You will see such type of candles also, this green candle and the red candle, where there is no wick at all, or if at all there is a wick, it will be very small. That indicates that the price movement or the dominance or the commitment by the bull or the bears is unidirectional. In this case, the price opened here, the bull took control, they dominated, and they continued to dominate till it closed here. No wick at all. Alright. In this case, the price opened here, the bears took control, they kept on dominating till it closed here. Got the point? Then we have something called as the range. Now the range is the price variation between the highest price and the lowest price for the given period of time of the candle. If the candle is for a period of 1 minute, then it is the difference between the highest price and the lowest price during that minute. Or if it is for a day, then the highest price and the lowest price during the day. If it is a monthly candle, if each candle is representing 1 month, then it is the highest price and the lowest price during that month. So what you see here in this case, the range is small as compared to the range here. Alright. In all these 4 candles, the body size of the candle is the same. I have purposely kept them the same. Like in this case, the opening and closing here, in this green candle and this green candle, in this red candle and this red candle, the opening and closing is the same, but the range is different. Here the range is small, here the range is large. And what does the range mean? It primarily indicates the volatility of the stock or the volatility of the asset during that period of time. And what is volatility? What is the significance of that volatility? That we have already studied in our other courses where we have talked about the derivatives. Alright.